Working man investor, today's video, the downfall of the US dollar. Recently, the dollar has been declining in value and it has caused a debate. Does the dollar's weakness call into question its role as the reserve currency of the world? Along with that, the United States as the strongest economy in the world. Well, the dollar has been the reserve currency for several decades. There's multiple reasons for that. One, the United States is the largest, most stable economy in the world. We have the deepest financial markets in the world. We have a well-established, consistent rule of law. Our elections are fair and our political parties are pretty open and transparent. We have relatively consistent tax laws. They do change depending on what party's in charge, but it's consistent. A culture of innovation and entrepreneurship. And then when you factor in the United States military is considered the strongest in the world, and it provides the security of the entire global economic system. So those reasons are why I think the US dollar is probably going to remain as the reserve currency for the foreseeable future. Foreseeable future could be 10 years, it could be 20 years. Don't know. But for now, there's still more good than bad. However, every reserve currency does come to an end at some point. Today, the dollar does face more potential risks than it has in previous decades. Tariffs and trade policy uncertainty are part of it, and investors are also concerned about our debt. Our debt is a big concern. It's up to $37 trillion right now. The way that we finance our debt is through the sale of U.S. treasuries. We sell it to investors in other countries and corporations, and the more countries that show up to our auction and the more bidders we have at the auction, the more expensive the bond gets, the treasury gets, and the lower the interest rate gets. That's important. You want a low interest rate for our government so we finance our debt cheaper. Right now, it costs about $580 billion a year to finance our debt, which is to pay the interest rate on our treasuries. You don't want that going up much higher. That you get to the point where the only way we're collecting income is the government can collect income is through taxes and tariffs. You don't want that to get to the point where that's not enough to cover our interest payments on our treasuries, and that's where we're headed. So that's to my opinion, that is our greatest risk. The other risk is the tariffs, simply because it calls into effect Triffin's dilemma. The dollar being the reserve currency of the world, the only way for other countries to get a hold of the dollar is to produce something and then sell it to us, and we pay in dollars. They take those dollars. They then use it to settle transactions in the global economy, and they also loan it back to us by showing up at our treasury auctions and buying our treasuries. It's another way to keep the interest rate in check and lower. So we need countries to be able to get a hold of the dollar, and then we want them to show back up at our auction and loan it back to us. We are the only reserve currency in the history of the world that has the privilege to borrow money in our own currency, the dollar, through treasuries. We do not want that going away. That, in my opinion, is our greatest risk. Now, today, 60% of transactions are still settled in the dollar through the global economy, so we're still doing well. That's well over half, but that is down about 15% from about 20 years ago. So it has been a slow erosion over time of the dollar as the reserve currency, but in my opinion, still has quite a few years to go. So therefore, the dominance of the dollar does continue to be durable, as I've said, but investors might be starting to shift their perceptions of the dollar. 70% of investors surveyed believe it is overvalued, and 61% expect it could continue to depreciate. The thing about to depreciate a dollar is, too, as the reserve currency of the world, you really want a strong dollar for buying because it makes everybody's our imports that we buy from other countries, cheaper. This fights inflation because then we can put it on the shelves in our store and sell it at a cheaper rate. When you have a weaker dollar like we currently have, it takes more dollars to buy these goods and services from these foreign countries, which means that could get passed along to the customer on our shelves at our different stores, at the Targets and the Walmarts and our grocery stores too, for anything that we import food-wise. So that's another reason why the argument for a strong dollar and to be concerned about our currency getting weaker. One of the simplest metrics to track U.S. policymakers do this, and it's anything that anybody can do. It'll give you an idea of what kind of credibility the dollar still has, is the percentage of trading days in which the stock market, the bond market, and the U.S. dollar lose value. U.S. assets have experienced these simultaneous declines about 7.5% of the time on trading days over the last 3 years. Now, you want to compare that to a country, say, like Brazil, that has experienced that with their currency and bond and stock market, 20% of trading days. It's a really good indicator. So overall, the U.S. dollar status as a reserve currency is not likely to suddenly collapse. And if it does suddenly collapse, I don't know what's going on in the World War III. It's a catastrophe, and we would actually have more to worry about than our savings and our reserve currency collapsing. It's more likely to continue to just slowly erode like it's been doing until it gets to a more urgent situation. But to completely collapse, it's unlikely. Like I said, they're at risk of a continued decline. Now is a good time to take steps to protect yourself and your wealth and your assets due to inflationary environments, or perhaps look outside the United States for other investments. That's not a bad idea. There's ETFs that are offered across different other countries, Asia and Europe. You can maybe look into bonds, and gold, silver, crypto isn't a bad idea either. So that's what I got for you today. Working man investor, keep grinding, people.